Okay, so let's have a look at the fourth adjustment for Liken Limited 2019. It was discovered that goods had been sent to a customer on the 31st of 12th, 2018 on a sale or return basis. So sale or return means that if the customer doesn't sell them, well, then they can return them to us. So they're not actually sales that we have done with the customer because they can return it to us. So these goods have been entered in the books as a credit sale of 7,500. So credit sale, that means that we would have had our sales and our debtors. So that's the credit sales. They owe us 7,500. So we need to adjust our sales and we need to adjust our debtors and also need to adjust our closing stock because that stock can still be returned to us. We actually haven't sold that stock yet. And that stock is markup cost of 20%. So what we need is the sales and the debtors figure. Those two are going to decrease. So your sales figure is going to decrease, your debtors figure is going to decrease, and that's usually by the amount in the question. The credit sale. And then we're going to increase our stock, closing stock, by the cost price. So we need to find out what is the cost price of those goods that we sold. So I remember every time we sell anything with stock, it's always the cost price. So it tells them in the question, this 7,500 is markup of 20%. So 120% is equal to 7,500. 1% is equal to 7,500 divided by 120. So that's going to be equal to 7,500 divided by 120, which is 62.5. So 100% is equal to 62.5, multiply that by 100. So 62.5 multiplied by 100 will give us 6,250. So our sales is going to decrease by the amount in the question because it tells us in the question that these goods have been entered in the books as a credit sale of 7,500. So we've put them in as 7,500. So our sales are going to go down by 7,500 because we haven't sold them yet. Our debtors are going to go down by 7,500 because they don't actually owe us that money. And then your closing stock is going to increase by 6,250 because that's the amount of goods that we haven't sold. So your sales, so we're going to find our sales figure from the question. So 1,590,000. Take away the sale or return, which was 7,500. So our sales figure is 1,582,500. So that's going to go into your trading account. Then your debtors then. So our debtors figure are 98,200. So they're going to go down because they don't owe us that money, sale or return. And it's going to go down by 7,500. So 90,700 now is our new debtors figure. And then our closing stock, 6,250. So 6,250, we need to increase it. So we got a new figure of 80,150. That goes into our trading account in the balance sheet as a current asset. So remember this 73,900 we've already calculated as part of our first adjustment. So with your sale or return, three accounts: sales, debtors, closing stock. Sales and debtors are going to go down by the amount in the question. So for this question here, they said that we've credited sales by 7,500, so we have to use this figure. And the markup is cost of 20%. So we have to find out how much the cost of the goods were. So we need to increase our closing stock by that figure. And that's how you do the adjustment on a sale or return.